So Claire, we're going to have a little bit of a chat about mortgages, investment properties and so forth today. Can you tell us a little bit about what you do and why people would need your services?
Well, Tommy, what I do is I actually help people get their finance for either their home loans or their investment properties. So usually I have a client that will come in and see me and they will just sort of we'll run through what it is that they're wanting to accomplish, and then I sit there and help them sort of work out a strategy how we can get them to that goal. So whether that might be their first home, as I said, a first home buyer, they might just sort of want to know about how they go about starting their savings plan, how long they've got to have those savings for, and then what the strategy is to get them to that point. And then once they're at that point, then they come back and see me. Then I actually help them set up the loan and sometimes even help them find a home to purchase, just depending on what it is that they want me to help them with. The other thing that I do is, a lot of my clients now have been into their properties because I've been doing this for 24 years now. So I've got lots of clients that are buying their second and third property, and that sort of is usually investment. And a lot of my clients don't have time to be out looking for an investment property themselves. So that's also a service that I offer to my clients, where I actually do, I have a team of people that I work with, and we sort of do some research. I work out what their borrowing capacity is, and then we sort of find a property that fits within their goals, their comfort level for their purchase price, and hopefully in a good area that's going to have some good capital growth for them for their future, so that can then help them either have a better retirement plan for themselves, or their strategy might be to sell that property at some stage and pay down their mortgage on their existing home.
So Claire, you've helped me a lot. Can you tell the audience, what are the things that you do that help the first home buyer?
Well, just recently, I had some clients come in that are wanting to purchase their first home. They actually had a lot of consumer debt. So consumer debt being could be zip pay, credit cards, personal loans. And because they are usually a fairly high interest rate, what I helped them do was actually, we put all that into one loan, so we consolidated that debt, got their interest rate much lower. Then we actually got their repayments lower, which then helped them to be able to put that extra money aside into their savings plan. So what they're doing now is they've got their savings plan happening, so they know how much each month they need to be putting away to get them to the goal, to where they want to be in 3 months' time, to purchase a block of land so that they can do construction. So what I'm helping them there with as well is I can actually help them find the land and then find a builder that can do the construction for them if they don't feel comfortable about negotiating what things they might want or they mightn't want. Some people don't feel comfortable doing that, but I work with somebody that sort of can negotiate with the builders, and it's not just one builder. We can actually source a number of different builders, and then the clients can actually pick the plan and the block of land that best suits what they're wanting to do.
Okay, so I guess buying a first home's a really big deal. A lot of us people are aspiring to do that. What are the most common things that you see people having problems with?
I think really they just don't know where to start. I think that's just the basis of it. We're not taught at school how to save and how to think a little bit outside the square about to get us to where we want to be, like what our end goal might be. So I think that's where they find the challenge. They just have no idea where to start. They don't know who the team is that they need to build around them, so they need to, one thing I did was build some relationships with some real estate agents, so that once I got to know them, I'd go and say, look, I'm looking for a property, this is my price point, can you let me know if you have something that comes onto your books? And so that's establishing that rapport with that agent, so that they think, okay, well, this is in this price point, I've got this client Clare on my books, I know that this is what she's after, I'll give her a call. And so that sort of is a great start there.
For a lot of first home buyers that are out there, what are the things that they're currently trying to do, and what would the difference be in working with someone like you?
Well, a lot of the first home buyers at the moment know there's lots of schemes out there that can help them get into a home, but they actually don't know how to source those schemes in a lot of cases. and also they're not sure what lenders actually have the schemes, because not all banks have all the schemes. So when a first home buyer comes to me, I sort of find out exactly what it is that they are wanting to accomplish. I work out whether they have enough deposit so they don't have to go into mortgage insurance world. And if they don't have that, is the new government scheme available to them? And then that comes down to what their income might be, what the purchase price of the property is. And then once we've established that, that's when we go looking for a lender that will actually fit the needs of that particular client. It's not like trying to, it's not like running out there to every bank trying to find out, if you can, go to that lender, or putting in, applications to any bank just hoping you can get what you want. It's about drilling down to exactly what that particular person or couple might want, so that I'm finding, the exact product that's going to suit their needs.
Okay, cool. So in terms of your experience with first home buyers, what are the common pitfalls that they fall into when they're trying to navigate this on their own?
One of the main things that I find that the first home buyers haven't got a handle on is their savings. It is so important that they're doing this genuine savings every week, every month. It's got to go into that bank account. It's got to stay in that bank account for a minimum of 3 months. Some lenders want 6 months, and they're not to touch it. So they're not to take anything out of it. I had a young couple that came in to see me. They had $30,000 in savings, which was fantastic. But what they did was they pulled out $20,000, bought something, and then sold something and put the money back in. Well, that wasn't classed as genuine savings then, because that full amount had not been in that bank account for that 3 months. So that's that's one of the main things. The other thing is their spending. They have to be aware that once they get a mortgage, that's going to impact on their spending. So they need to sort of look at being more, I suppose, strategic in where they're spending their money and how they're spending their money. So that's another thing. That's what the banks look at now. Once upon a time there was a little bit of a leeway. If you thought you only spent, $2,000 a month, on everyday spending. But now we go through everybody's bank statements, and if that doesn't marry up to what their bank statements say, well then obviously we have to readjust their living expenses, and sometimes that then throws them out of serviceability to be able to get a loan.
If you could give all the people out there that are thinking about buying their first home and they're doing it on their own, what advice would you give them to talking to someone like yourself? What should they be asking?
Just sit down, have a meeting and say, look, this is what we're wanting to do. So we want to buy a house, and this is the suburb we want to be in. So perhaps then it's like, for me, I'd have a bit of a, while the clients are there, I'd have a bit of a look at what the prices are in that particular area. And if they were keen to be there and they hadn't sort of started their savings or weren't quite there, I'd say to them, look, this is what you need to do. Just go back, keep saving. I keep saying keep saving, but it's so important, very important nowadays that you do that. Also, if they've got some consumer debt, I would encourage them to perhaps consolidate it or pay it down if they're, sometimes they've got some cash sitting there that they can use to do that. And then once they've paid that off, because a lot of times the young ones, it's not only just young ones, a lot of people actually just, if they've got a credit card, they just pay off their interest only. They never get that principal paid down on that credit card. And yet it's like an impossible mission sometimes to get that totally paid down. So if they have some spare cash, I would encourage them to do that, and cut up the credit card. I have cut up so many credit cards for clients. It's a good feeling for them, and it's great for me knowing that they're going to accomplish that goal that they've set for themselves. So when a first home buyer sits down with me, I like to find out if they have got that 20% deposit, and if they haven't, well, that's when I explain to them, they might have to go into the mortgage insurance world. I let them know what mortgage insurance is, and it's something there that's to protect the bank, not to protect them, which is what a lot of young people think it's there for. Encourage them to save, encourage them to watch what they're spending their money on and how they're spending their money. If there's any way that they can, You know, if they're having 5 coffees a week, can they cut it back to 3? You know, so that's going to get them to that goal a little bit faster. You know, I recently, well, actually at this very moment, I'm helping some first home buyers, and they had done that they spent about $85 a month on takeaway and coffees and going out. Well, because I have to go through all their statements, as any bank does nowadays, they're actually spending $214 a week. They had no idea. And I said to them, oh my goodness me, you know, you would, if you weren't spending so much on that, your savings would just be tripled so quickly. So now that they're aware of that, they know that they can, where they need to cut back. And they're happy to do it, because they just have no idea that that's what they were doing. It's this world of tap and go, and it's not in their conscious mind that that they're spending that sort of money.
I must say I'm guilty of that one myself.
Yeah.
So I guess, Claire, like, you know, to all the people that might be watching this and they're thinking about buying their first home, what's the process of working with you?
Well, first of all, obviously they'd just sort of give me a call. We'd have a bit of a conversation over the phone. I would ask them a few questions. That'll probably take about 15 minutes. I like to find out, you know, just a few things like what their savings are, what their income is, what their debts are. And then from there I can actually work out their serviceability on that and come back and say to them, you know, this is what your borrowing capacity is at this stage. Now, if they're not quite ready to go, well, what I say to them is, you know, set them out a plan, as I've said, and then I'll touch base with them. You know, it might take them 3 months to get to that goal, so then I'll give them a call and say, how are you going with the goal? And if they've reached their goal, well, that's when we sort of have another conversation about perhaps a pre-approval, where they might be ready to get that pre-approval and go house hunting. So that would be the process when they come to me.
So Claire, for first home buyers that are out there, you know, really looking to have a go at getting their first property, how much money should they be saving in accordance to their purchase price?
Well, the minimum is 5%. However, it's always good to save, you know, more than that, because they have to pay mortgage insurance if they don't have a 20% deposit. So that what that means is a bank will lend them up to 80%, and then another company called a mortgage insurer will come in and lend them up to another 15%. But then they pay for that. So as I said, the minimum is 5%. But if they can sort of have more than 5, 10 or even 20%, that's going to save them more money, and they'll get a better interest rate as well.
So for the best deal for a first home buyer, what would be the percentage that you'd recommend in savings?
Oh, Tommy, that's really difficult to say, because a lot of young people now live away from home, and so they're paying rent and trying to save for a first home, you know, as well. Look, for me, if they had 10% deposit, I think that's a really good sweet spot for them. It's the mortgage insurance is a little bit less that they need to pay, and then they can capitalise the mortgage insurance on top of that, so they don't actually have to come up with that fee up front. They can actually capitalise it to that 90%, which might take their loan to, say, a 92-93% lend.
Okay, great. Thanks, Claire. So if you can have one message to all the first home buyers that are out there to wrap this up, what would you say to them?
What I'd say to them is, you know, don't just keep waiting and waiting to get into the market. Save as much as you can, as quickly as you can. Just jump into the market, and remember, I think a lot of them think that this is going to be their forever home, but it usually isn't. You know, usually they're sort of changing about 3 to 5 years. So I'm just talking to a person at the moment in Sydney, and I said exactly the same thing to her. She's been looking for a property, and a little bit out of her price point and a little bit out of her area where she really wants to be. So what I have suggested to her is, I said, look, you want to be in this particular area because of the, you know, the proximity to where you work. So I said, how about, we know it's not going to be your forever home. So how about you just sort of, you've got your savings now, you've got your little bit of savings. How about we jump in, just get you something to get you into the market in the place where you want to be, because she wants to be close to the train station. And I said, you know, at least that's going to get you into the market over the next couple of years. She's a little bit handy. She can actually do a little bit of renovating. So that could be something like doing a bit of painting, things like that, nothing major. That's going to add a little bit of value to the property. And then if she sits on that for a few years, hopefully she'll get some equity, and then she might be in a better position where she can actually sell that and then move on to where she actually wants to be in a bigger property or in a different suburb.
So the idea is get started as quick as possible.
As quickly as you can.
Love it. Okay, cool. Thanks, Claire.